Okay, so my friend asked a really great question. We were talking about oil and how it's pretty undervalued right now. So right now he had basically asked like, should I go ahead and buy UWT now, considering how undervalued oil is, or should I wait, basically? So right now I've got the chart for UWT pulled up. This is an hourly chart, so every candle represents 1 hour. So first, let's back out a little bit, and I want to get a little better idea of the macro view. So we're gonna switch this to a daily chart. Of course, this is trading view that we're looking at. So the first couple things that I see, I'm gonna zoom out. So this is February of last year. So here's the beginning of 2019. So the first thing that I see right here, and I do this on virtually every single trade that I take. I'm always going to look for key levels, basically. So I'm going to get my drawing tool out here, and I'm going to make a horizontal line, and I'm going to mark this support area right here. So you can see, and when I'm looking for support and resistance, you're kind of looking for a pattern, and you can see a pattern here where prices really didn't want to drop below $8.84. So I'm going to mark that, and you can see how prices they got down to this low here, and then they started to rally, and then we started kind of testing this low like once, twice, and then we broke through here, and then things really started to dump, and you can actually see how we broke through this support level, and then we came back up to it, and when you have supports that get broken, they actually tend to turn into resistance. So you can see how we broke through support, and then it came back up to this key level, and there's resistance there, and then we broke lower. The reason being is you've got to kind of get in the minds of traders a little bit. So now that we know that this is a key support level, you have buyers that are going to be buying from this level because prices turn back here. When it tests this level again, you have people that are buying from the same level. And you kind of get a little bit of like a herd mentality, like it works because a lot of people do it. There's no logical reason why this particular price, at least that I can think of, why there'd be so many buyers coming in right here. But because so many traders use support and resistance, it tends to work. So that's why you have buyers coming in at this price, because they there's a higher probability that this level is going to hold, and you can keep your risk really small because you can put your stop loss like right immediately on the other side of the support level. So yeah, like I said, we broke through support here, we came up, we tested it again, support turns into resistance, and then we break considerably lower. Now we're going to switch to the hourly view. So I click up here in the top left, we change it from 1 day to 1 hour. Again, now each candle represents 1 hour of time. So let's see, this period, this was February 20th. Okay, so right now you can see that when we're up here, these candles are all significantly bigger than these candles down here. So this just represents a significant amount of volatility. Like you get big gaps right here. That means that the market closed right here. And then when it opened up the next day, there were so many orders in that were placed overnight that it just gapped down instantly. Same, it did it here, it did it here, it did it here. And you can see, like I said, these candles are significantly smaller in their range than these candles up here. So basically what that indicates is just like volatility is decreasing. This indicator right here is called a MACD, and it's known to be somewhat of a momentum indicator. So you can see, so the blue line is kind of like the fast line, the red line is kind of the slow line. And then when you get really, really big separation like this, it means that there's really, really strong momentum. And you also kind of want to look for crosses. So like right here, there was a cross, and you can see we did have somewhat of a small rally, but this is really just a pullback and a significantly larger downtrend. So generally, I would say you want to always be trading with the trend. Granted, there are instances such as they're called reversals, which is what we're kind of hoping to anticipate right here. And one indication that there may be a reversal coming is the MACD. So again, it's a momentum indicator, and it's going to tell us when momentum is slowing down or when it's picking up. So right here, you can see that the blue line crossed above the red line. So that is our first indication that the momentum is getting sucked out. So let's make it a little bit bigger here. And okay, so this is where we're at currently. And I'm going to remove this line here. Okay, so you can kind of see that prices are putting in a support level. So prices went down. You've got this big tail on this candle right here. And if you saw my previous video on how to read candlesticks, basically the body of the candle, like the wide part, indicates where the open and the close were. If the close was below the open, then it is a red candle. If the close is higher than the open, then it's a green candle. So right here on this green candle, you can see that the candle opened here and it closed here. And then the wicks represent the prices where it traveled in between. So you've got an open, and it probably went down a little bit, went higher, and then it closed right there. And then the next candle opened here, closed here, opened here, closed here, open here, close here, etc. So, like I said, this is what's called a bullish pin bar. It's kind of a reversal indicator, because, like I said, you've got prices coming down. You know, this candle opened here, prices went down, and then buyers stepped up really strong, and it closed right there. So what that's telling us is that there are buyers interested at this particular price level. Now, if I were to be trying to trade a reversal right here, and it's not necessarily a bad idea. I think it is going to depend a lot on how things continue to progress in the next, I would say, 2 weeks. If things really start to ramp up, you might see prices continue to fall. And to be honest, I think they are going to continue ramping up, or the economy continuing to drop, just because things are really getting gnarly. And if we go the way of Italy, it's not going to be good. So with that, what we could do is do something like this. So we can draw a trend line. Let me see here. Zoom out. So you can see I'm going to get my line tool out. So when you draw trend lines in a downtrend, you're just matching up the highs, basically. So we've got a high here, and then we've got a high right there. So we can see that we've already broken through the trend line. So normally when people are trading a trend, they're going to enter right at the trend line, because that way they can put their stop right on the other side of it. And a lot of traders use trend lines, gosh darn near all of them, unless you're like a Warren Buffett type where you're just trading on fundamentals. So, we should probably the short traders were probably trying to short from right here. And basically there's just not enough sellers right now to keep this thing getting pushed down. Like I said, the candles were huge here. Now they're getting really, really small. So I really think that this is a key support level. Like I said, oil has never really been this low, at least not, I don't know if it has in my lifetime, maybe when I was in elementary school or something. So you can see that the volatility is just getting sucked out of it. The blue line is above the red line on the MACD. So this might actually be a pretty good entry. If I were to take this trade, what I would probably do is, and you know what I'm going to do? I'm going to show you something here. So what they call the swing high and the swing low, they always create a little bit of support and resistance. So we've got a swing low right here and a swing high. And we've got a swing low and a swing high. And you kind of get just like these waves essentially. And like I said, the previous swing high in this instance is going to create some resistance. So I'm going to draw another horizontal line here. And you can see this green bar right here has a pretty long wick on it just to the right of my cursor. So you can see that there are sellers right here. So we're kind of going to get what's called a trading range, where you get prices bouncing back and forth between this area. What I would probably do is I would wait for this level to get broken at 39 cents or so. And if it does get broken, then I would buy UWT. If it does not get broken and we actually break further to the downside, then I would definitely consider staying out of the trade. So that's how I, at least personally, would trade this thing if I was looking to get in. That way, you know, once we break this previous swing high, then we're making what's called higher highs. So it's like you've got a high, and then you would have another high, and then a higher high, and a higher high. I know the jargon is a little bit confusing, but anyways, that's how I would take this trade, and I think it's a decent idea. I would just probably put in what's called a limit order or something at 39 cents or 40 cents. So as soon as prices hit that level, it automatically triggers your order, and then you're in. So I hope that helps a little bit at least, and yeah, let me know how it goes.